All right, today we are tearing into Amazon's latest earnings report, and let me tell you, the numbers are just staggering. But beyond those huge headline figures, there's a really fascinating story playing out. A story about the company's future, its insane spending, and the high-stakes game it's playing. So let's just dive right in.
First up, let's just look at that main number, $180.2 billion, in a single quarter. I mean, that is a 13% jump from last year, and it's a figure that's almost hard to wrap your head around. Yeah, Wall Street definitely sat up and took notice of that one.
But honestly, that massive revenue number, it's really just the tip of the iceberg. What's way more interesting is what's happening just beneath the surface. The costs, the investments, and the really bold bets Amazon is making on where it's headed. And that's the story we're here to unpack. So, you have to ask, what is driving all of this incredible growth? Well, the answer comes down to 3 letters, AWS. Amazon's cloud computing division is the real powerhouse behind these numbers. Get this, AWS revenue grew by a whopping 20% year over year, hitting $33 billion. And this isn't just your standard steady growth. No, this is a major re-acceleration. It's basically signaling that Amazon's hold on the cloud and AI market is getting even tighter.
And look, this isn't just hype. The CEO, Andy Jassy, he pointed it out himself. This is the fastest AWS has grown in years. And for investors, that's a crystal clear signal that the company's main growth engine is just firing on all cylinders.
So the big question is, what's fueling this fire? Well, it's kind of like a perfect storm. You've got this relentless demand for just basic cloud services. But the real story here is AI. Amazon is just pouring money into its AI capabilities. They're developing their own custom chips like the Trainium 2, and, this is wild, they're adding an incredible amount of power to support it all. We're talking over 3.8 gigawatts in the last year alone.
Okay, but all that amazing revenue, it definitely came at a cost. And when you start to dig into the expenses, the whole picture gets a lot more complex and a lot more interesting.
So officially, Amazon's operating income was $17.4 billion. I mean, that's a very healthy number all by itself. But, and this is a big but, this is the number after some pretty major one-time expenses were already taken out.
And this is where things get really telling. If you add those one-time costs back in, the operating income actually jumps to almost $22 billion. That's more than a $4 billion difference. So what on earth is causing that huge gap?
Well, it really boils down to 2 main culprits. First, a $2.5 billion legal settlement with the FTC. And second, another $1.8 billion in restructuring and severance costs. I mean, these are massive expenses that took a serious bite out of the quarter's profits.
But Amazon isn't just burning cash for no reason. According to Andy Jassy, this is all about making the company more agile, helping it work more like a startup. So you can see it's really a strategic move, not just about cutting the budget.
And it's not just about those one-off costs. Amazon is also spending big. I mean, really big, to build out its future. This is where we can see the company's long-term strategy in action. Now, to really get what's going on here, we have to talk about something called capital expenditure, or CapEx for short. And simply put, this is the money Amazon is spending on all the big stuff: new data centers, warehouses, robotics, all the physical things that are going to power its growth for years to come. And the amount they're planning to spend is just mind-blowing. We're looking at around $125 billion for the full year. This isn't just maintenance. This is a massive, massive bet on the future of AI, cloud, and logistics.
And right here is the fundamental trade-off. On one side, you have these incredible investments in cutting-edge technology. And on the other, you have the short-term pain of lower profits and less cash on hand. It's the classic spend money to make money playbook, just on an unbelievable scale.
So with explosive growth on one hand and just enormous spending on the other, it is absolutely no surprise that investors were, well, torn. Let's break down how the market actually reacted to all this.
Now, on paper, it looked like a clear win. Amazon beat expectations on both sales and earnings. So you'd think the stock would have just skyrocketed, right? Well, the reality was way more complicated. The market was completely split. You had the bulls, the optimists who see that AWS growth and AI potential, and they pushed the stock up as much as 10%. But then you had the bears, who are worried about all that spending, and they actually caused the stock to dip by 3% at first. It just perfectly captures the tension at the heart of Amazon's story right now.
And if there's one metric that really captures this tension, it's free cash flow. This is the actual cash a company has left after paying for everything, including all those giant CapEx investments. It's seen as a really critical sign of a company's financial health.
And this is exactly where the concern comes from. Amazon's free cash flow has actually gone down. And why? Well, because all that spending on data centers and warehouses is eating into their cash reserves. This is the number that has some of those investors feeling a little nervous.
So, after all that, what's the verdict? Is Amazon being reckless, or is this a genius long-term play? Are they sacrificing profits today so they can completely dominate tomorrow? That is the billion-dollar question at the heart of Amazon's story, and honestly, the answer is going to shape the future of not just the company, but the entire tech world.